Hello everyone, welcome to another video. For those people who are new, my name is Sharon Kessio and I'm a trader. Welcome to the channel. I do weekly forecast and weekly outlook every Sunday. Welcome to the community. If you have not subscribed, hit that subscribe button. So we're going to do our weekly forecast and we will start with the DXY. So DXY is the dollar index and we have to always do dollar index analysis because we trade major pairs. If you trade any pair that has a USD, you have to start your analysis from the dollar index because the dollar index is literally the dollar. So now, if you look at it here, right now I'm on the monthly time frame, and I want us to start from the monthly time frame because there's something I want us to see. So you can see right now we have 5 days left before we close the month of February, and we are at a point where price has not taken out the previous month high and it has not taken out the previous month low. So at this point, we can consider our monthly candle to be an inside candle. So if this month will not close as an inside candle, the market has to take out either the previous month high or previous month low. I want us to look at the weekly time frame and the daily time frame just to see what kind of order flow we have and how the market is aligning. Because let me tell you something, guys, the monthly time frame is a higher time frame. So whichever direction the monthly time frame is going to go to, most of the time you will see the lower time frame aligning to that and the order flow on the lower time frame aligning to that before finally you see it on the higher time frame. That's just how price moves. That's market structure 101. And I teach all these in the bootcamp that I normally have every month. You can check the link in the description to join. So if we look at the weekly time frame, I just want us to see at this latest price action here. You can clearly see the market made a low, we had a retracement, and then the market made a lower low. At this point here, we got break of structure from this swing low, retracement, and then a lower low. But then if you look at it further down, you can see the market actually swept this low, and we had all this rejection, and the candle closed as a bullish candle. So of course, the next candle, high probability most of the time when you get such rejection, you anticipate likely a bullish candle, which happened here. So there was that possibility of just saying this market was just a rejection because the market was retracing to this weekly fair value gap here. Because clearly we see anytime the market makes a new low or we have a break of structure, there's a high probability you now need to anticipate what? A retracement before the market continues with the momentum. So, which means if this market is bearish, are we likely to see that continuation with the bearish momentum after the market retraced and tagged this weekly fair value gap here? Let us see what the order flow is on the daily time frame for us to get an answer to that question. So now, if you look at the daily time frame, you can see this structure is so clear. Of course, when this market was making a low here, we had that lower low, lower high, lower low, lower high, lower low, lower high. Then this was a retracement, and now the market has made a new low. So this leg here is what we consider the retracement to the weekly internal range liquidity. So if the market retraces to the weekly internal range liquidity, then you anticipate if it's just a retracement, we should be seeing what? We should be seeing the market aligning with the bearish order flow. Because we said, guys, whatever direction the market is going to show you on the higher time frame, you will see that order flow early on the lower time frame. And clearly here on the daily time frame, if that was the case, when we were doing the weekly outlook last week, I told you guys we were watching out for this fair value gap here and this fair value gap here. If this market was going to give us more bearish moves, we needed to have seen the market should have actually inverted this fair value gap. But instead, what happened? This bullish fair value gap has been used as support for price, and instead, price has inverted the bearish fair value gap. So this is a situation where the market is inverting a bearish fair value gap and respecting a bullish fair value gap. So which means this order flow here is changing to a bullish order flow. So then there's a high probability that we are likely to continue with this bullish order flow that we see right here. However, if you look at it on the weekly time frame, you realize that the weekly time frame, the order flow change is still not so clear because so far what we have are just these candles where the market tagged this fair value gap. The next was a bearish, and now we have this bullish candle. And you can see the market has also formed an order block. So, of course, the final confirmation of this bullish momentum or the market reversing after getting a rejection on this low here would be when the weekly time frame inverts this fair value gap here. But before that happens, remember we said you will always see the order flow aligning on the lower time frame before finally the order flow aligns on the higher time frame. So having said all that, so that means a high probability for us would be we want to see the market use this inversion fair value gap to push price higher if this market is still bullish. And if you're not going to close as an inside month, high probability is the market is going to come for this high here. But you clearly see we have just a few days left. It's only this week, 5 days left, and we close the month of February. So it might fail to get here and we end up closing as an inside month, and then next month starts and we finally get there. If we get a bearish dollar, then that will not be a move for me for this week. So now we're going to look at USDCHF, and USDCHF and the dollar index are positively correlated. Any major pairs that has USD as the first currency in the pair, that is a positive correlated pair with the dollar index. So now, because we're anticipating a bullish dollar index, so that means also for USDCHF, we should also be anticipating a bullish USDCHF. So it's still the same with the dollar index. Price has not taken out previous month high and previous month low. It is still an inside month. And if you look at it, you can see at some point, all this was consolidation before finally the market had this drop here. So if you're going to have a bullish dollar, then this can be really nice of consolidation, manipulation, and then we anticipate what? A distribution higher or expansion higher. Now, do you see how I'm just using everything I know or what I know just to build a narrative or a story? That is how you're supposed to trade as an ICT trader. You need to be creative and you need to use what you know to layer on top others' confluence to try to come up with a narrative or a story when you're doing your analysis on whether you think price is likely to give you A or B. So I want us to look at the daily time frame, and you can clearly see on the daily time frame we had all this bearish drop, and then this at some point was like a retracement, and then we had this bearish move. So if this market was still bearish, or if we had still had that bearish momentum, we needed to have seen more bearish moves, right? So far you can see the market, you can see price respected this order block and it was used to push price higher. If you look keenly, you'll see there's this bearish fair value gap here, which clearly the market has inverted it. So again, that is another thing. The market is respecting bullish PDRs and violating and inverting bearish PDRs. That needs to tell you the story. Most of the time, anytime you're anticipating a reversal, that is normally the first thing. This clearly tells us that the market is respecting a bullish fair value gap. So this is a bullish order flow. Now, of course, now we have this inversion fair value gap, which I'm looking at. So at this point, I want to use this as a key level. I'm anticipating that the market will use this to push price higher. So I want us to look at EURUSD. So EURUSD and the dollar index are negatively correlated. So that means if you anticipate a bullish dollar, then that means you want to see a bearish EURUSD. And still the same thing, it's still an inside month candle. You can see price has not taken out previous month high and it has not taken out previous month low. But if you look keenly, EURUSD has been bullish for some time now. We had all this bullish momentum. But you can see the latest price action, it was still just a sweep. We swept this high and we had a close inside here. This is what we have. So first of all, I want you to know, simply because this candle did not close above this high here, that doesn't necessarily mean that you should expect the next candle is a reversal. You can still have a situation where the next candle still closes as a bullish candle. However, when you get such candles, then you move to the lower time frame and you see all the lower time frames, price is aligning to a reversal, then you're likely to see a reversal. And that reversal could not mean a complete reversal. It could just be a retracement. So let us look at the lower time frame and see exactly how it's aligning so that we can really see if this month is likely to give us a bearish move going for this previous month low or a bullish move to go for this previous month high. So if you look at this weekly time frame, you can clearly see, of course, it's been bullish, made a high, a retracement, and then a higher high. But do you see, this is not even a higher high per se. So we had this high, but do you see how the market actually swept this high here? And then we got all this rejection and closed as a bearish candle. And clearly you can see there's a fair value gap here. that the market tagged. But you see, as of now, price has not yet inverted this weekly fair value gap, just the same as DXY, because the final confirmation of that reversal or likely to see a bearish move and the market is coming for this low is when the market inverts this weekly fair value gap. So if we look at the daily time frame, you can clearly see we had all this bearish move, which we could say was a retracement, and then we continue bullish. But instead, after getting this bearish move, this looks just like a retracement. After the market made a low, a retracement. And do you see how the market actually inverted a bullish fair value gap? Because if this market was still to continue bullish, this would have been a nice key level that would be used to push price higher, and you would see continuation of that bullish momentum. So right now we are at a point where actually we saw a rejection candle. You could see on the weekly time frame the market swept the high and we had a rejection candle. So that's the first thing. And now the second thing, you can now see this market is not aligning bullish anymore. You can see on the daily time frame the order flow is aligning bearish and the market is violating bullish key levels. So you can see there's another confluence that we can add to just now give the bearish narrative. And you can see this is in line with what we expect when you see a bullish dollar. So this week, because we're anticipating a continuation of this bearish order flow, high probability is the market we can have a retracement to this inversion fair value gap, and we see that continuation of the bearish momentum. So let us look at GBPUSD, starting with the monthly time frame. So if you look at GBPUSD, clearly you can see it had this high, the market made a higher high. Then at that point, the market gave us a retracement to this low here. So when you get such a high and you see bearish momentum after making this higher high, even if you see this bearish momentum here, you would be looking at it and anticipating it's just a retracement. You'll not be thinking of a reversal. You'll be thinking of a retracement to an internal range liquidity. Then you expect the market to do what? Will continue higher. Then in this case here, you can see we made this high here, but it was a liquidity sweep and the market closed, but it still closed bullish. And we said this is not a guarantee that you expect a reversal. The next candles can still close bullish. But so far you can see this candle looks like it's bearish. So we need to look at the lower time frame and see exactly the kind of momentum or order flow we have. So if we look at the weekly time frame, you can see we had that, and then this is what we have. You can see price retraced to this fair value gap here, but finally this fair value gap got inverted. So this is a good fast confirmation of a likely more bearish move. And if that is the case, then this is our next draw of liquidity for price. So let's look at the daily time frame. You can see on the daily time frame, the momentum is clear. After this move, we had this bearish move. You can see the market actually inverted this bullish fair value gap here, which is okay because the market, we still had a weekly fair value gap below price, which price got to that weekly fair value gap. We had this bullish momentum. At some point, we all anticipated that this is likely acting, the weekly fair value gap is likely acting as support for price and you expect more bullish momentum. But instead, what happened? You can see the market ended up inverting this bullish fair value gap, giving us all these bearish moves last week, and also inverting this bullish fair value gap and also inverting the bullish weekly fair value gap. So now we are at a situation where the market is violating bullish key levels and respecting bearish key levels. Then that tells us that is a high probability that this market is bearish. So at this point, I'm watching this weekly inversion fair value gap, but you can see also there's daily inversion fair value gap. So want to see the market. Okay, already the market is here. Just want to see, tag this and see that continuation. So now let's do analysis for yen basket. So yen basket is just the yen. The same way we do dollar index analysis for major pairs. It's good to do yen basket analysis if you trade yen pairs, except USDJPY, because USDJPY is a dollar pair. So for USDJPY, expect it to move the same as the dollar. So now we're going to start with the monthly time frame, and I want you to see something here. You can see, so first of all, this was 2025 low, which we had a sweep of it January this year, 2026. Feb, price still came back here. And do you see how this candle closed as all this was a rejection and closed as, and okay, it still closed as a bearish candle. And then the next month comes in. Did it sweep this low? Looks like it almost took out this low. Then still this all this looks like a rejection as of now, because the month has not yet closed. So but so far this is what we have. So most of the time you see, if you have this and a major low is has been swept, and you're in a situation where the market has it has really been going lower. So this is a low. You're likely to anticipate a retracement. And of course, the retracement is still not a must, because you can still have the next candle or this candle closing bearish. That can still happen. But now let's look at the lower time frame and see what kind of order flow or how the lower time frame is aligning. So let's look at the weekly time frame. If you look at the weekly time frame, of course, you can clearly see this is an order block, which price tagged last week. So if we look at the daily time frame, you can see this is what we have so far, and there's this fair value gap, which is what we wanted to see price get to, this fair value gap, and it got to it last week. And we also have this all these are bullish fair value gaps. So if you're going to have a bullish momentum or a bullish move, as we said, you will see order flow changing starting from the lower time frame before finally you see it on the higher time frame, which in this case we're talking about the month time frame. So if you're going to see that order flow, bullish order flow, then we want to see the market not invert this fair value gap. This is the last line of defense that we have for a bullish yen basket. If the market inverts this, then there's a high probability that the market is just going to come for these actually equal lows. These are equal lows here. So far what we have, we need to see the market not invert this and give us that bullish momentum. So let's look at GBPJPY. So GBPJPY and the yen basket are negatively correlated. And starting with the monthly time frame, you can see clearly price tagged a monthly fair value gap. That's all we have. So on the weekly time frame, you can clearly see we had all this bearish move. Price inverted this bullish fair value gap, which got tagged on the week that just ended. And so far, you can see now we have a fair value gap formed. So if this market is bearish, then you want to see the market. We can get a retracement to this before you see that bearish momentum. You know the drill. If that is not the case, price will invert this. And if this gets inverted, then you anticipate a bullish GBP/JPY. So let's look at the daily time frame. And if you look at the daily time frame, you can clearly see after all this bullish momentum, for the first time, we're now having that bearish drop where the market even inverts a weekly fair value gap. So if this market is to continue without bearish momentum, it's still the same thing. If the bearish order flow is there, that's what you want to see. However, if the market inverts, if we get this, then expect likely bullish momentum. So let us look at gold, and you can see gold so far it's an inside month candle. We still have 5 days left. So this is all you have on the monthly time frame. So on the weekly time frame, you can see this fair value gap was supported price, and so far we have an order block right here, and which price tagged last week, and this is what we have so far. So let's look at the daily time frame. On the daily time frame, you can clearly see this is a fair value gap, and it's a bearish fair value gap. So if gold is bearish, then this can be a good level that the market can use to push price lower. But as you see so far, this is what we have. If we invert this, then there's a high probability if price inverts this and then gives us more bullish PDRs, and the bullish PDRs is used to push price higher or supports price, then there's a high probability that gold is likely to be bullish. However, if the market does not invert this and we see bearish momentum, market giving bearish PDRs and price supporting that bearish PDRs, then there's high probability of a bearish move. As of now, for gold where it is, I don't really want to have just a single definitive direction. I see how still gold is likely to be bullish or bearish. So that is all I prepared for this weekly outlook video. If you enjoyed these videos, don't forget to give it a thumbs up. If you have not subscribed, subscribe to this channel. I'll see you in the next one.